before we started Acuity, I got into the ad tech space in 2004. I founded a company that was very successful, sold it to a public company, and then in 2009, I wanted to get back into the startup space. I went to see a friend of mine. His name is Dr. Nathan McCoos. He has a PhD in machine learning and algorithm, and we started talking about the concept of creating a trading platform for ads. And together with two other co-founders, Rachel Kapka and Joe Antman, we started Acuity. First 2 years, we were building the technology. It was all about building everything from scratch: the bidder, the ad server, a site classification unit, and obviously, most importantly, the algorithm. And we designed it in a way that delivers ROI for advertisers. That's really the job of the algorithm. In 2011, we commercialized. Bootstrapped all the way until 2014, grew very quickly, so we did $1 million in revenue in 2011, $5 million in 12, about $10 million in 13, in 14, about 14 million, 21 million last year, and that's in 2015, and still growing at a rate of 40–50% on an organic basis. In 2014, we went public, and we went
on which exchange?
In the Toronto Stock Exchange. And the reason we went public is because we made a strategic decision that the winners in this space are going to be on the self-serve side of things, and we needed to make an investment into that. So we chose the route of going public. The other thing we wanted to do, up to that point, we were purely a Canadian company. We wanted to expand into the U.S., hiring a sales force in the U.S. That's the second part of why we went public. So we executed on those things. Set up our self-serve and set up a U.S. sales force. Both have been very successful. Today, more than 50% of our revenue is on the self-serve side, and we believe in 2 years from now is going to be the vast majority of our revenue. And the U.S. sales team is doing a great job. The other reason we went public is we said we're going to go into the red for a few quarters, and then we're going to be profitable again. And once that happens, we're going to start going and buying other companies. So our 40–50% organic growth is not good enough for us anymore. We want to go faster, and so we're able to compete with the larger companies out there. And to get there faster, we're doing it through acquisitions. We're doing it in a very strategic way. We're adding components to the system that we do not have today, or not as strong as today, that will allow our existing clients to start using, deliver better results from an ROI perspective to our existing client, which means more business coming from these clients, and in general expanding the footprint, the U.S. footprint, more salespeople, and everything that goes with it.
So tell us about the recent acquisition of 140.
The acquisition of 140 Proof, we started working on that earlier this year. We saw their demo, and we're really excited about how powerful this system is from a way that they can target people. So what 140 Proof is a platform that delivers ads mobile, so everything is mobile, and all in-app. But in the background, they have a system that collects data on the social side of things, and really creates user profiles from social, and that's for multiple different social platforms out there. And I believe about 700 million user profiles out there, call it personas. And it's extremely effective data. And now that we have access to this data, we can now offer it to our existing clients, use this data to target, and therefore getting better results from an ROI perspective from clients. So that's obviously the number one thing. Second thing is, 140 Proof have 7 salespeople. We have close to 20. So altogether, we're going to have a larger sales organization selling the product. So we'll be able to grow the business substantially as well. And obviously, on the back side, the way they deliver the ads was in the past more on the manual side of things. Now we're going to integrate it into the automation system and be able to improve the buy side of things.
So tell us about the opportunities for you guys, the kinds of clients you're getting, and how you see the business developing the next year.
So when we started, it was all about the bigger brands. So, the car companies, the banks, using us on the full serve side of things. As we progress and we're moving into more of the self-serve business, we see a host of different things. We see resellers, so people in the programmatic space, but they don't own their own technology, so they're white labeling our technology. We see brands that would like to bring it in-house and take control on their marketing spend and strategy, and we see those guys as resellers as well, or we call them platform partners. We see traditional networks that in the past used to be buying everything directly from publishers. Today they're supplementing it with the programmatic side of things. So there's a mix of different customers that we're seeing now, but the bottom line is we move more and more into the self side of things. We're providing the technology solution, and this is where we want to play. We want to play on the technology side. Now there's a whole bunch of advertisers out there that would like to start taking control of their ad spend, but they don't have the expertise in-house. So we also offer another solution for them. It's a hybrid solution. So we start them off on the self-serve model, but we run it for them. And we have a transition period of about 3 to 6 months where we would train their people in order to execute it on the self. So that's been very effective as well.
And tell us a little bit more about the media that you guys go through your platform, mobile, video, and so on, and how you compete against some of the bigger players that are well established in the States and in Europe.
Yeah, so I say that from a competition standpoint, we have it starts with a good knowledgeable sales force that goes out there and gets the tests, right? If you get a test and they try you and you deliver better results, they're going to continue using you and they're going to increase the spend. In fact, most of our clients, that's how we win their business. They come in with a smaller spend in the beginning, they see the kind of results that our system is providing to them and the kind of customer service that we provide to them, and then they start spending more and more with us. So that is really the classic way that we have started in business. I think it was also from necessities because we were not out there raising the tens and hundreds of millions of dollars, so we couldn't afford the very expensive sales force. So it was all about performance in the beginning. And that's how we win it. And today it's more about, we have a lot of incoming leads coming in, we're doing demos of the system, and people are really impressed with what they see, and they sign up and they start using it. We're very big into training, so if a new customer for the self-serve comes in, we would go to their office, offer our training, just do whatever needs to happen in order for the customer to know it very well. And then the idea is, as soon as they know it very well, they know how to use it properly, and they get the results, they're going to keep on using it forever. So that's how that works, and I think that's how really we compete with the big companies out there. And you mentioned Europe. Europe is something very new to us. We just set up our data centers in Europe in July of this year, 2016. And right now it's servicing our existing self-serve clients, and in the future we're planning to have a go-to-market strategy next year to really marketing and sales.